It's Brian Preston, the money guy.
We talk about dollar cost averaging. We love dollar cost averaging, but there are some people out there that say lump sum investing.
Yeah, a lot of people, and a lot of really smart people, right? I mean, there have even been like studies, and we've actually done full episodes on lump sum investing versus dollar cost averaging. By the way, if you're listening to this live, we're going to do a Q&A after the show, after we record. So if you have some specific questions, because I know I've seen some come through on the chat about lump sum versus dollar cost, hang out after the show. We're going to answer your questions. Are we going to give? I think Brian will probably give away.
Yeah.
There's 3 here, which means he'll probably give away 14 or 15 of them. So we'll answer those questions. But we get this all the time. You know, should I lump sum? Should I dollar cost average? And there's actually been some really good research.
Vanguard did a good research. There's several research studies we covered in previous podcasts, previous shows. Here's the thing I would tell you. I want to get, because I'm realistic. I have good common sense on money and the fact that I think if it's not a huge material sum for you, it's okay if you lump sum, because there is some science in the fact, and mathematically, since markets make money 2/3 of the time, it makes sense because we tell you all the time that 7 to 8 years out of a decade, usually markets are pretty good, and we're experiencing that right now with the financial markets. So it makes sense that lump sum investing, having that money working sooner, is better.
That's right.
So 2/3 of the times, the statistics tell us it's better to lump sum invest. However, that doesn't tell the whole story, because what your biggest fear is what happens if you sell a business? What happens if you sell a big plot of real estate? What happens you come into a once-in-a-lifetime, maybe a retirement payout or something like that? You love that stat that 2/3 of the time you're going to make money with a lump sum, but you're also saying, yeah, but it's just like right now. Every day on the nightly news, they're telling us, because we had this new trade deal reached with Mexico, that the stock market's reaching an all-time high.
Right.
Is this when you for sure want to bet your entire retirement on the fact that we're not going to have any volatility in the next 12 months? I would tell you, if somebody gave me a 7-figure payout, like a pension that was trying to get rolled over because they were doing away with it or something, I would be very hard-pressed to say, let's go put it all in right now. I'd want to come up with a very diligent strategy to put it in over time, because what does the research says the difference between lump sum and dollar cost averaging is on a big chunk of money? It ranges, depending upon the decades we're looking at, it's only about a 1.5% to 2.5% total difference.
So I want to make sure I heard you right. So if you look at lump sum versus dollar cost average, about 2/3 of the time, lump sum ends up with more terminal value than dollar cost averaging. However, the magnitude of that difference is only about 1.5% to 2.5%.
On average, when Vanguard did the study. So this is what I would tell you. I would look at that 1.5% to 2.5% difference is almost like your insurance policy if you're dealing with a large sum of money. Like I said, if you're dealing with a few $1,000s, lump sum invested, it's not a problem. I'm more worried about the people who are coming into life-changing money and they've got to make a decision. Should I wade into the market through a dollar cost averaging and fight volatility that way, or should I just throw it all out there? There's a good chance 2/3 of the time you're going to end up okay with the lump sum, but that's not a risk, especially when the premium is just not big enough.
Sure.
So I don't want to spend a ton of time more on that, but I did want to at least let people know we've tried to turn over all the stones and think about the things you would probably be thinking about when it comes to market timing, when it comes to lump sum investing, when it comes to dollar cost averaging. We really do try to give you the strategies that will help you be successful. Now, I've done a horrible job on this episode of giving you the intro of saying, please go check us out on the Money Guy Show.
Oh, yeah. By the way, this is the Money Guy
Show. By the way,
Show.
if you've made it this far, please subscribe. I mean, you've made it this far into the show. The least you could do is subscribe, because you're obviously that much of a financial mutant that you wanted to hang around. And we've got some cool things working. We're already doing the live stream. If you have not joined us for a live stream, pre-join us. That's why we set up these cups, is because we are giving away these tumblers when we do the Q&A sessions. We've also got some cool stuff. If you want to check out #AskTheMoneyGuy, we will be doing more series and content that way. But just a lot of fun things going on right now.
One thing, obviously, in doing the #AskTheMoneyGuy and doing the live Q&A after, one of the things that we're really trying to do better is we want to continue giving you guys all tons of great information. But we also want to make sure that we are interacting and communicating with you well and often and getting you the things you want. So if you haven't gone out to moneyguy.com and subscribed, and all you have to do is give us an email address. That way we can keep you updated on all the new content that's coming out. So if you want to have exciting new tools you can use, new podcasts, new content, new videos, and just want to stay up to date on that, go out to moneyguy.com, sign up. That's not really a sign up. Just put your email address and you'll stay in the loop.
Yeah, and we have some other things coming down the pipe that you'll definitely want to make sure we have your email address so you know what's going on with the Money Guy Show. And then last thing is just kind of the way I close it out is everybody's probably going, wow, found this financial show. I've discovered this YouTube channel is pretty new. It's less than a year old, but these guys have been podcasting for 13 years now. What's the catch? Why are they giving away so much? There is no catch. Here's our only ask of you. If you appreciate this gift of good financial advice given to you, I want you to, when you get to the point that you need a co-pilot or somebody to look over your shoulder and give you a second opinion about your investments or your financial life, that you'll consider repaying us by reaching out to us and consider taking the relationship to the next level. I'm your host, Brian Preston, my co-host, Mr. Bo Hansen. Go check us out, moneyguy.com. We love doing this show and can't wait to see you again soon.